Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio. I'm glad to be back. I was away last week. Thanks for the good wishes that everybody gave me. They're like, Dan, where are you, dude? What's up? And so forth. So I was away in Florida. I didn't tell anybody because every time I go away, mortgage rates spike. So I wanted to keep a secret. So let's find out what happened today. Don't go away. We'll be right back. Okay, so I'm getting good feedback on the new format. We get right through the rates for today. Tuesdays and Thursdays, we post educational videos. Last week, we went over an extended rate lock that we have throughout about half the country. We can lock your rate in for up to a year. So if you're building a house, it can help you out. And then last Thursday, we put out a video in regards to forbearances. So if you're one of those in forbearance, please check out that video. I'll try to link those above here. But let's get on to what happened today. So last Friday, there was some good news in the employment numbers. That kind of spooked me a little bit because employment numbers there was almost 1 million jobs created in March. So I'm thinking, man, is that going to really start affecting rates? So let's go and see what happened to rates for today. So that number was posted on Friday. So I'm thinking, that's going to have a trickle effect today. But we have great news. MBSs are up 22. So those that follow me, why we follow this number here is this is what's happening to the mortgage-backed security bond for today. This is the price of the bond. As the price goes up, what happens, guys? Rates go down. So prices go up. When this number is green, price goes up, rates go down. Prices go down, rates go up. The bigger the number, the bigger the adjustment. So 22 is a nice little adjustment for us. That probably will drop rates down about 0.1 to 0.2, which is great news. But you can see, I went away last week, and let's go back. What'd rates do? Nothing. Thank goodness. You know the reason why for that? Because I left and didn't tell anybody. So that's what's going on with the MBSs today. Let's see what happened throughout the day, because as we know, even if you bought a stock and the stock opened a day at 100, it closed the day at 100, what did it do throughout the day? It might have went to 95, 105, bounced around. What did we see today? We saw a nice rally all day long up until about noon, and then it stagnated and just went kind of flat from there. At the end of the day, we had a red candlestick. This means there's more sellers than buyers. There shouldn't be anything in here that should really have a reversal in the markets. We're going to go over the economic news here in a second, but that's a nice trend, flattened, so I'm happy with that. The only thing that scares me a little bit is this red candlestick. Let's get in. Economic calendar for the week. Let's go over it for the week, but let's focus on kind of what happened today. Factory orders came in worse than expected. That's kind of to be expected to a point. The non-manufacturing numbers came in actually better than expected. Previous month was 55. So let's not focus on those because that'll just confuse you. The JOLT index is tomorrow. That basically is an indication of how many jobs or their openings to. Job openings is what the JO means. So we're going to find out how many jobs are openings. That also isn't going to really affect the markets. What's going to start to affect the markets is Wednesday, Thursday, and Friday. Wednesday, the FOMC, meaning the Federal Reserve, is going to come out with their minutes from last meeting. It should be no surprises there because we already know what transition through that time, but it's going to they'll have it in writing. Then Thursday and Friday, this is going to be where there's going to be some activities. We're going to have jobless claims, so continued jobless claims and initial jobless claims. Okay, this means how many people just filed for jobless claims and how many are continuing with their jobless claims. Then Federal Chairman Powell is going to speak. He runs the Federal Reserve, so when he talks, people listen. The next thing is on Friday. These are basically numbers that the Fed and all of us watch and economists watch, and this is a gauge of inflation. What's going on with inflation? As long as these numbers are tame, which I'm expecting they're going to be tame for another basically month or two, and then we're going to start to see these numbers start to heat up a little bit. But I expect for the next couple weeks or at least month that there's really no changes going to take effect here, which we might continually see easing with mortgage rates. Okay, so now this is the post that I used to post every day. These only had 30-year fixed rates, but let's go through those just so we can compare. This analyzes mortgage rates throughout the country. This does the whole country. The next report that I'm going to go over basically takes a snapshot of 50 different lenders and gives their rates. So you're going to see a little disparity in rates, but this just at least puts you in the wheelhouse. I want you to understand there is no specific 30-year term. Okay, your mortgage rate varies by a whole bunch of criteria with your rate. So your mortgage rates consist of what the MBS market is doing, and then what we call loan level price adjustments. Those are going to be factored to your rate, your credit score. The lower your credit score, higher the rate. Your loan to value. The higher your loan to value, meaning loan to value is basically your loan amount divided by the value of your home. The higher the loan amount, the higher the rate. Is it your primary home or an investment property? If it's an investment property, you have a higher rate. So those are a whole bunch of factors that get involved or components that are involved with your mortgage rate. So there's no, you can survey about 100 different lenders and you're going to have probably about 50 different rates, believe it or not. So I hope you follow me on that. So these are where 30-year rates are throughout the whole country. 30-year conforming is at 332, the 30-year jumbo 325, 30-year FHA 334, 30-year VA 294. They're basically stagnant throughout the last month or last week, and for the last 4 weeks they're kind of in line. They're just about an eighth higher from where we were. So here's the one that I've been focusing on, and I'm trying to share with you guys on a daily basis. And I post this newsletter every day around 5 o'clock. So this goes over today's 30-year conforming loan. Now, guys, these are not my rates. Somebody is like, Dan, what are your rates? Tomorrow, Tuesday, I'll do a special. I'll compare these rates to my rates. I won't have an educational video. I'll compare the rates so you can see where I am versus these. But right now we have the 30-year conforming rate at 338. Friday, we're at 339. The 15-year fixed rate is 282. It is down 0.01 from Friday. FHA and /VA rates, ours are the same. So our government loans, which are FHA and VA, are the same. Right now, throughout the lenders that this surveyed, it was 2.88. It's up 3 basis points from where we were Friday. 3 basis points is 0.03. Okay, so when I say basis points, when I say 3 basis points, that's what 3 basis points looks like. Okay, the 30-year jumbo, 3.33, it's the same. And the 5-year ARM, 2.75. On Friday, it was 2.73. It's up two ticks. That's what we're going to focus on, this cell right here. This gives you a 52-week range where you were or where you might have been. This down here we're going to ignore. These are if you're looking to pay points. And you can pay a variation of points from 0 points to 2, 3, 4 points if you want to. So we focus on this right here. These are what the rates kind of should be in that realm with no points. Okay, I'm not saying no closing costs, but no points. All right, so that's where the top 50 lenders in the country are right now. So what I ask you to do is, if you're in the process of getting a mortgage right now and those rates are in line to what you have, please send me a copy of your loan estimate if you're in the process right now. Okay, you might have a rate that's a much higher than what we posted. There might be reasons for that. Your credit scores might be high or real low. Your loan to values might be real high. There might be reasons for it. So I ask people, if you're in the process right now of getting a mortgage, email me your loan estimate. And I'm going to give you my email information here in a bit. So if you're building a home and you've been pre-approved, most builders or most lenders that are working with your builder, they'll lock you for 60 days. We have a lock up to 1 year in about 20 different states throughout the country. Not in every state, but if you're building a house in some of the main areas where there's a huge construction right now, we have programs that will lock your rate in for up to 1 year. The nice thing about that is, if rates drop during that time and we're 2 months prior to your closing and rates are say 0.5% lower than where we locked you, we can do a one-time float down, meaning we can float you down to the current rate one time at no cost to you. So basically it's an insurance policy to say, okay, I'm locked in. If rates go higher, I'm locked in. If rates go lower, we have a one-time float down. Okay, so that's that. So again, if you're building a house, buying a house, or refinancing with somebody else, please email me a copy of your loan estimate. If you had not pre-approved yet, please, I'm going to give you our website, our phone number, and everything on how to get a hold of us to help you in that part. If you're in a forbearance, that is crazy right now, and it's getting crazier. I just talked about 10 different people today, and their lenders are reaching out to them saying, you got to pay your account current. Some are even saying you can skip another year. So there's a whole variety of features built into the forbearance programs. All I ask you to do is don't put your head in the sand. You need to do something. At least get an exit strategy, meaning when your forbearance is up, don't just rely on your lender to tell you, basically maybe pin you up against the wall saying, we need a check from you for this amount right now, or this or that. Please consult us for your exit strategy. That's all I'm asking, and I'll leave that at that. If you haven't contemplated refinancing and you need to consolidate, or you're like, I just need a lower rate. If you close your loan over a year or so ago, the rate's probably 1% higher than what they are today. So I ask you to reach out to us. Here's the best way to do that. But before we're done, please give me a thumbs up. Let's try to hit 200 thumbs up today. Give me a thumbs up, subscribe down below, click the bell so every time I post a video, you get an alert. So that being said, how do you reach out to us, or how do you find me? Well, first thing, go to our main web or our YouTube channel, The Rate Update with Dan Frio. Check out over 800 videos that we have. The next thing is, how do you get a hold of me and my team? Go to therateupdate.com. Scroll to the bottom, here's our 800 number. That's probably the fastest and easiest way to get us. 844-775-LOAN, 844-775-5626. You can schedule an appointment right here, a 15, 30, or 60-minute consultation. We'll do this either via the phone or Zoom, however you'd like to do it. Or, like I said, if you're in the process right now and we could possibly at least review your documents that you have, email me. My email is pretty simple. It's D for Dan, Frio, so dfrio@preferredrate.com. If you're like, Dan, I just want to apply online, all you got to do is click here. If you're mobile savvy, it'll take you to my mobile app. You can do basically everything you need to do right there. If you're desktop savvy and you're like, I'd rather do it via desktop, you hit apply here, you can do it there. If you're in the process and you're like, I want to buy a house or refinance, but I got some questions, just some concerns, I'm not sure of this or that, click this here if you're looking to buy, or this here if you're looking to refinance. It'll ask you about 14 to 18 different questions. Based on the answers that you provide to those questions, it'll help me put you into the perfect scenario, or in the perfect loan, actually. So that's it for today. Trying to make it as simple and fast and sweet as I can. So God bless. Take care. Happy Monday. We'll see you tomorrow, and we're going to do Rate Comparison Tuesday. Take care, guys. Thanks for watching.